Hey everyone, we'll get started here in just a moment. It is about 6:50, so we're a little bit early, but I'm gonna let some people come in the room. Those in the YouTube channel, you are running around 5 seconds behind, so really not a bad lag time right now. We'll get started here shortly. All right, guys, we're gonna go ahead and get started a little bit earlier than normal. It is June 8th. Cannot believe we're already June 8th. It is almost 7 o'clock Central Time. This is the Time Savvy Trader session, our typical Monday night. And let me dive in over here. Let me get my screens here set up. And we are going to do our best to make sure we maximize our time tonight. Can you guys see my screen? Fantastic. If one can see it, then that means we all can see it. Again, I'll be checking the chat box on both the YouTube as well as our Zoom room. Again, we're preferring the Zoom room because it's just a little bit easier for us to manage. But that does not mean we don't welcome those who are coming from elsewhere. Let me make sure that that chat box is up there and we've got everything up and running. And it looks like we do. And you guys said you could hear me and you can see my screen. Fantastic. So let me go ahead and give you our Time Savvy Trader weekly rundown. It's what we've been doing basically for the past 2 or 3 months at least. And again, nothing's really changed. And you saw this morning, especially in our Hawkeye session, we are sitting and moving nowhere. A lot of turmoil. So overall theme again for this week is we had a strong jobs report, but we are still kind of sticking with interest rates and that oil risk and the dollar that still kind of matters. So all that together is the theme. So before we touch the charts tonight, I just want to slow everybody down just for just a few minutes, talk through the bigger picture, and not because macro gives us a magic crystal ball, because it doesn't, but because that the macro understanding helps us understand why certain pairs are moving and why some moves are cleaner than others and why some charts need to be just left alone. We're finding that to be more true. So that is really the heart of the time savvy trader session, swing trading. We are not here to chase every candle, every alert. We are not here to predict what the world's going to happen tomorrow. We're here to kind of prepare, narrow our board down, and look for qualified swing trade ideas where the chart, the bigger story, and our tools are actually all working together. And we're talking tools like Sherlock, Hercules, Tide Fusion, and even a little bit of Sentinel and Atlas. So the big idea for this week really is that the market is still doing what it's been doing. It's wrestling with the three major forces that we've talked about for a while. It's that U.S. job market is stronger than it was expected. So that's good news for the job market. But inflation pressure has not gone away, and the geopolitical risk is still sitting right on top of energy prices. The oil and the Iran and U.S. situation over there. So that combination matters. So because when jobs are strong, the Federal Reserve does not feel the same pressure to cut the rates. In fact, after Friday's job reports, markets started leaning more toward the idea that the Fed may have to stay firm a little longer and possibly even hike later this year if inflation refuses to calm down. So let me say this very, very carefully. That does not mean the Fed is guaranteeing a hike. It does not mean we blindly buy the dollar everywhere, but it does mean that the dollar still has a reason to be respected. So, and for us swing traders, that is really, really important. When the dollar when the dollar has support from the interest rate expectations, it can put pressure on pairs like the Euro US, the Pound US, Aussie US, and it can keep that US yen kind of elevated. But if the market gets a little softer inflation number this week, that story can completely shift very, very quickly. So that is why Wednesday CPI report, I believe it's Wednesday, I think it's Wednesday. We'll look at it here in a moment. That was, the CPI report that's due this week is a major count. It would not treat that. I would not treat this kind of like any just normal week. This is a difficult week. The market is basically asking this: was Friday's jobs report strong enough to keep the Fed on the defensive, or will inflation data kind of give the market permission to breathe again? Um, that's really the first thing we really need to watch. Now, the second major force is that oil thing happening over in the Middle East. We have had continuous tension involving Israel, Iran, Hezbollah, the Houthis, the Strait of Hormuz, and we saw oil spike on renewed attacks and then pull back some as both Iran and Israel signaled a pause in the strikes. But here is the really mentor part that I want to leave with you. A pause is not the same thing as peace. Um, Markets can relax for a few hours or even a few sessions, but the energy market is still carrying that geopolitical premium. And as long as oil is elevated, inflation risk stays alive. So the currency market's a very, very difficult thing to be trading right now because all that geopolitical stuff affects the Fed and our Fed, and that in turn affects Europe, and that affects Japan, and that affects the emerging markets, and overall it affects the currency flow globally. So when we look at oil this week, we are not just asking, is oil up or down? We are actually asking, is oil adding pressure to inflation expectations, or is it oil calming down enough to let the currencies kind of reset? And that is a big, big difference. When we tested our Tide Fusion and Sentinel, we were in a very, very different market. And I've mentioned this almost every week. If you paid attention to AI technology inside of trading, you haven't seen a lot of advertisers saying, trade with us because our system is fantastic. Most of them are failing because the market's not in a predictable, historically predictable fashion. It's not moving that way. It's very odd. So that is a big difference. So gold is also kind of interesting here, and we've been watching that in the Hawkeye session in the morning. We'll do more of that this week as well. Again, just a reminder, Hawkeye will be open to the public all week long. We put a new link for just this week inside of the TraideMasters room for everybody to register that's interested. Gold has been pulled in two different directions. So on one hand, conflict and uncertainty normally support gold. And then on that other hand, if the dollar is strong and rates are rising, that can weigh on gold because gold does not pay interest. So we're kind of caught in a weird spot. So right now, gold is not just a fear trade, it is also a Fed trade. If rates stay higher, gold could possibly struggle. If inflation fear starts to rise up again while the dollar cools, then gold could possibly catch a bid again. So that matters for us because gold can help confirm the mood of the whole entire market. So if gold is firm and oil is firm and the dollar is firm, that tells us markets are still very defensive and inflation aware. But if gold weakens and oil fades and equities recover, and that tells us that the markets may be shifting back towards uh, risk appetite, which means back into a tradable fashion. So let's talk about our currency, since that's what we kind of mainly focus in. We are going to dive into equities later on, probably starting next week and even into the following weeks this summer. But because I'm even diving more into equities because the currency market's been really odd. So the dollar is still the center of the board tonight. Um, the dollar index is around the 100 area, I believe, which is not extreme by itself. But the important part is why is it there? The dollar has been supported by stronger jobs, obviously, and then we have our higher yields, and knowing that U.S. is a safe haven. It's providing a safe haven demand from all the geopolitical attention that we've talked about. So for us, the traders, the dollar is not a random chart tonight. It's not. The dollar is the weather system. It's what's driving everything. And that means before we get all excited about the euro US, the pound US, US yen, and so on, we need to ask ourselves, is this pair moving because of its own strength, or is it moving mostly because it's reacting to dollar pressure? And that is going to be our huge question. I believe I last saw, I haven't looked at charts today, but I believe I should say I didn't look at them today. I looked at a Hawkeye session, but I haven't looked at throughout the day. If I recall correctly, we were sitting at 1.15 area of the Euro US. The Euro has its own issue this week. Um, the European Central Bank is very much a focus of ours. Europe is dealing with a tough mix. So energy-driven inflation risk on one side and weaker growth on the other. So that is not going to be an easy environment to trade. So with the Euro US, I do not want us forcing any sort of opinion. I want us watching whether the pair can build structure after the dollar's recent push, or whether any bounce is just a weak correction into resistance. In addition, we need to be aware of what hurdles. What we're seeing is we're able to take a swing trade and go partially to our target, and then it pulls back. So we need to have some other trade ideas, some management in, because what I'm seeing is our trends aren't lasting 2 days, 3 days, a week, or 2 weeks. We're seeing our trends only lasting a few hours and then a pullback. So we want to be very careful. So the pound US is very similar to the US, our euro US, in the fact that it's also been under pressure from the stronger dollar. But the UK has its own inflation and rate story. Ours is different. The Bank of England is not out of the picture. So right now, the markets seem more focused on the Fed side of the equation. So with the pound US, we got to be patient. So we need to make sure that the location of our entry is confirmed. We need clean structure. We need room to make sure we can get to the target. And we definitely don't want to be chasing a stretched move just because it looks exciting. And that's a lot of times we jump into a momentum trade. Momentum trades right now probably aren't very good to go with when it comes to swing trading. Then we flip over to the US yen. This is probably one of the most important pairs to watch, but it's also one of the most dangerous to be in, especially if you're just carelessly going. So I believe, if I recall, we were around the 160 area again, and that matters because Japan does not like disorder and chaos. They don't like yen weakness. The pair can trend beautifully when intervention risk is real. So if we look at the US yen, we just need to respect both sides of that trade right now. The trend may still favor the dollar strength, but the location matters a lot. A late, long, near intervention sensitive levels is not going to be the same as possibly a breakout, a retracement to a spot, a pullback, controlled, that type of thing. So that is why we just don't want to say, is this bullish? We need to ask, is it tradable from where we are at? And that's a big difference for the US yen. That used to be a relatively easy pair. So as this thing is happening with the market, obviously our Tide Fusion's learning. It's an AI driven system. We're using data back stuff, and we haven't made any adjustments yet. We don't want to make adjustments too quick because we don't want things to change back to the other way. We want it to learn. So we need to ask these questions to ourselves, do some of our manual trading. For the yen crosses, like the pound yen and the euro yen, we need to be just again, we need to be extra careful. These can be our fast movers, and they can look amazing after the move is already gone. But if the yen suddenly strengthens because of intervention talk or the risk off pressure that we talked about, those pairs can reverse hard and very quickly. So tonight when we jump in, I want us to look at the yen pairs, making sure we're very, very disciplined. They may offer us an opportunity, but they are not beginner friendly. So just at least not right now. So be very, very careful if you're new to trading. And then we got our Aussie US, and this is definitely risk currencies. They rely a lot on China, but they're also worth watching. Their story is more complicated though. If equities stabilize and the dollar kind of cools down, these risk currencies can actually recover pretty well. But if you'll stay elevated and oil remains that jumpy back and forth thing that we've been doing, and China or even the globe's growth concerns start to creep back in those places, that those same currencies are going to continue to really struggle. So again, we're not guessing here, we're not predicting. We need the chart to prove it. And again, like I mentioned, the charts are not acting like they've normally done in the past. So we need to be very, very careful. So let me bring us back to our time savvy trader process, because I don't want to go too long on our macro look. Our job tonight, in the short time that we have, is not to become economists. We can't make predictions on what's going to happen. Our job is to simply take the macro picture that we understand and use it to ask better chart questions. Here are the five. If you want to write these down or make note of these questions, I think these are going to be key for the next few weeks. Number one, where is the capital trying to hide? We don't really know where it's hiding. Is money hiding in the US dollar? Is it hiding in gold, bonds, or is it moving back into risk? We need to figure out where that's at. And hopefully our charts may give us a little inclination of what that is. Number two, is inflation pressure rising or fading? And the oil and CPI key are key here. Again, these questions we may not be able to answer completely all tonight since we have such a news-driven week, but we need to be able to focus on it. Where's the capital trying to hide? And is inflation pressure rising or fading? The number three question I wrote down here is what are the central banks doing? Are they becoming more hawkish or are they becoming less hawkish? And that is the Fed, the Europeans, the ECB, European Central Bank, the Bank of England, the Bank of Japan. What are they doing? Number four, is the move that was being made in our charts fresh, or are we past the move and possibly late? And this is where traders normally get hurt. A great story after a huge move does not automatically equal a great trade. So we want to be very, very careful. Has the move happened too fast, too far? Number five question. Does tide fusion confirm the idea? Are we trying to make the chart agree with our opinion? And this is the one that actually hurts the most. That is the one that keeps us honest, though. We hear it all the time. I've seen this before. I know that the market's going to do this. We really don't. And so, honestly, that is where most of our traders mess up in these five questions. They hear a strong jobs report, or they want to buy the dollar everywhere, or they hear the Middle East tension, so they want to buy gold, or they see the US yen pushing higher, so they got to jump in. But our rule over the next few weeks is very, very simple. And you're probably going to hear me say this quite a bit. Movement in the charts is not enough. We need to make sure we have the qualifications. Do we have the structure? We need the location. We hear about location, location, location. We need to know trend strength. Is the strength strong? We need room to move to the target, a Sherlock or an Atlas or anything opposing us of a strong wall. And that would be your daily time frame. 4 hours is important, but daily and weekly um, hurdles we need to be paying attention to. Are our tools aligned? And we'll talk about that. So if the setup's not clean, we're just going to move on. We may not be in a trade this week. And just understand that is not weakness. That is actually discipline. Why lose money? We have people losing money left and right, and they complain, well, the system's not working. The market's not. Don't trade. Wait. Find out what's going on. So for tonight, we're going to try to get a new understanding. My bias, my personal bias is right now is I want to respect the US dollar. I want to respect oil as it is. Definitely, I respect gold as a gauge of the mood. Um, I definitely respect the yen danger zone, but I also want to keep in mind that Wednesday CPI report is enough to change any trade that we're in carelessly. It could make us reach our target quickly, or it can make us reach our stop even faster. So, being very, very well aware of that is very, very important. So when we get ready to go to church, church. When we get ready to go to the charts, I want to just make sure that we look at those pairs that are clean on that 4 hour chart, supported by the daily context that we talked about, and not just sitting right in front of obstacles. So we're going to let Tide Fusion do what it's supposed to do. We will kind of key in on see what the dollar, maybe the dollar is doing, gold is doing if we have time. This is really a trade, a real swing trade setup. We want to find those, or is it just one that's giving us a lot of noise and headlines behind it? So tonight, we're going to be patient, we're going to be sharp, we're not going to force anything, because in this kind of market, the edge is not really in having a loud opinion. The edge is actually waiting for things to produce like they're supposed to produce. So let me jump over here and show you what we got this week. And there's our Wednesday. It is Wednesday, the CPI I was mentioning. I wasn't sure which day. So what do we have now? Not a whole lot, not a whole lot of red. So I would think tomorrow morning might be our best opportunities doing the Hawkeye session. Again, that'll start at 6 a.m. Central, 7 a.m. Eastern with Deb and myself filling in for Al. We have not a whole lot going on in the morning that's really going to concern us. But boy, Wednesday looks very, very ominous. This is going to be one that's going to be interesting to be in that day, but I'm not guessing I'm going to take a lot of trades until it settles down. And Thursday's follow up, again, we've got some big, big news coming in the morning. This is a very critical week of trading. If you're not confident, don't trade anything. Again, any trade that we might take is for demonstration purposes only. If I take it in my live account, I will let you know. I'm not afraid to take it in my demo for education purposes, but I'll let you know if I take it in my live account. Just looking at the following week again, nothing to be scared of, but this is that piece right here. And that looks like it's on Monday, potentially evening late. That I told you what worry about the Bank of Japan. They're going to be talking about their policy rate. So we want to make sure we're paying attention to that. Yeah, it's just a real, and then it calms down until Wednesday. Again, we've got federal funds rate at this point in time. I mentioned they were talking about easing back. They were talking about possibly raising it. Now it looks like they're going to keep it the same, but this can really shift our swing trading. Just a lot of quick stuff. And let's see what we got on the next week, and then we'll call our news time understood. Well, again, nothing here that's going to affect us as far as US. US dollar is the key. I'm not too worried about these right here. That's Thursday. So you can see things start to kind of cool down a little bit. But this next week is going to be very critical. January, February, March, April, May, June. Yeah, it's that second quarter number. Um, Man, overnight rate, they're saying it's going to stay the same, it looks like, but they're not talking about their rate statement at all. Man, it's just right here. Looking at the rates, I would not be surprised if US goes up to 4. I would not be surprised the pound yen goes up to 4. But we can't make predictions. So again, we've got a couple things we're going to be looking at. Got our new, I think this is a Hawkeye one. Yeah, it's the Hawkeye ready for tomorrow morning, ready set up. So make sure you register for that. And then let's just dive right on in. Looks like we're doing a good job on our one. So let's quickly look at what we've got. And these are now in a different order. Don't know why I put them in this order. I had to reset up my screens. So we're going to go pound yen first, like we have, and we haven't had any signal lately. You'll see some trades that I had in this. That was mainly our day trading stuff. We've got Sherlock, and we're looking at opposing. Now, really, what I'm looking for is we talked about finding clarity. We've got our dots pointing down. We've got our ribbon pointing down. We had a pullback right here and a move back and another pullback, but there's nothing here. So what I would like to do is move into our daily chart to see what Sherlock's telling us. Yeah, a major ceiling. If this thing will pull, we're sitting in the floor. That is an obstacle we want to avoid. So if it pulls back to 214.70, let's go back to here and we'll go 214.70, which is this zone right here. That's where we would get in. Okay. Very clear, clean move with that. Okay. Exactly. That's a pullback. It is not fresh. On Al's screen, you'll see this is orange is fresh. Fresh to me is pink. It stands out more. Good catch. But notice we have this line here. This was the peak for me. Now this is where I'm waiting for it to come. If it comes there, then I'll go into a swing trade if all things remain the same. Yeah. And that's how quickly we can do time savvy trader. We move on, we mark our spot, move on. Now, this is the Euro US on a 4 hour. You can see this nice move. We didn't get a signal, but like the other one, this is the area I'm waiting for it to come back to. Why? We've got a major ceiling here. If I were to get in it right here, my stop would have to be up here. So why would I want to do that? So I'm going to come over here and find a ray. And this is the area I'm looking for. If I can just drag that out like that. That's kind of the area. Now, that would be my entry spot. Now, again, I'll need to have context with my daily chart. I'm sitting on a major floor. That's going to be a huge resistance. That's a weekly floor, so it's not just a 4 hour. This is Tide Fusion saying, hey, bud, you're hitting a floor, not the time to get in. So I'm going to go to my daily, see where this is located. No Sherlock zone. Let me see if I can turn a Sherlock zone. There it is. That's a great place. Now, if I look carefully enough, I thought I put my line in there somewhere and it must be gone. But this major floor monthly, which is the bottom of this, is where I actually want to get in. Notice there's a Sherlock zone there. I would still want to measure and make sure that um, my screen is doing some strange things. Hopefully you guys can still see it. But this is a great zone. Got everything pointing down. I come back to that would be pricing at 1595. 1595 is this line right here. 15. That's where I'm going in, right there. And I mark it and we walk away. Okay. Okay, no questions on that one. Pretty straightforward too. But we really want to make sure we do this. If we're going to take this entry here and we want to have our stop above here, that's an 83. So I need to make sure that I can go at least 83 to my target. This would be right about here's where my target would be, and I can go 83. You want to at least get a 1-to-1 and have a trade plan after that. So that's this one. I'm going to go ahead and turn Sherlock off here and off here, and we're going to go to CAD yen. Nothing. Very, very tight. Nothing here. There's no signals. There's no clarity. We can move on. Nothing there to see. Now, the euro pound may be interesting. See what we can. No, it's still sideways. We're still bound. We are in this trade already. You can see our stop is way up here. Target is way, where's, oh, never mind. We're on the long side, it looks like. So this is our target. This is our stop. It's a decent one. We kind of fluttered around today. We'll see what happens. It's very sideways, very sideways. It looks like we bought in right here. And so we've been playing around with this downtrend, but we looks like we're going to have a potential color change in ribbon. Look at the daily, it's going to look worse. It's going to look like a downtrend. So not a great entry. Still in the trade. We're going to manage it. So not a great entry on my part. But that's the euro pound. I got the signal. I took it on a demo. Now this one's been interesting. This one's worked out real well. It's Kiwi US. You can see we got our fast sell signal. We got in here. It went against us a little bit, went really a great movement down. It went to one, it went to 1 to 1. So I moved my stop to a place um, that is break even plus some commissions. So I won't have, this is a non-losing trade at this point, not worried about it. But today we've had some nice movement down. We're going to expect and anticipate that this is going to become a hard thing. But if you notice, we put Sherlock here, we've got room. And so this is a perfect setup of where we were looking, what we were looking for. We haven't got enough, we didn't get another signal, but if you've noticed and paid attention to this, and when it dropped down and retraced this wick over wick, this area right here is where it came to. This would have been a reentry position for a retracement back, our pullback. So all in all, pretty solid trade. Does it mean it's going to work out? Nope. But at this point, I don't care. It's going to be profitable. Yeah, exactly. Exactly. Here's one of our crucial ones. You can see this has been the US yen. Had you been playing this, you had had a buy here. You'd have met your target most likely. You had a buy here. You would probably still be in your target, but you would have you moved your stop up. Let's reflect our Sherlock zones are right here. Again, if we can get a signal out of this. Now, this one is not sending to our alerts yet. If I postponed it, I'm going to be adjusting it for our Telegram alerts. So it's been really solid. But remember what we talked about in the beginning. The US dollar has been solid. So be very, very careful. This has been our strongest pair. Notice this whip. We would have had to have a good stop. And the tide fusion alerts give us a good stopping spot point. It gives us the pivot where the yellow is plus 20 pips. So it's tight right now, but this was a good move. So be aware, but this one can change on a moment's notice or any sort of news item. So be very, very cautious with the US yen, although it's been fantastic. Let's go ahead. And what's our time allowing? 7:21. Let's look at our Aussie yen. Again, we had a sell signal here. We needed to be aware we could have taken a trade. I have no problem taking the trade. Ribbons pointing down, dots are pointing down. We've got these demand or supply areas here. Our stop would be up in here. It'd be a long ways away. We would just have to measure from the time we got in at the entry to pivot up. That would be about 140 pips. That means I need to get to at least 200 pips away, and we could with this next wave. I would definitely want to look on the daily to see if we're not sitting in bigger demand. Remember the higher time frame. Oh yeah, if we can clear this, we got plenty of room. So this could have been a early beginning of a nice day trade, or not day trade, but swing trade on the daily chart. We got a drop base, drop level on level, stop above here. This has room to move down. Again, this is probably more due to the chaos with the yen than the weakness with the Aussie. So be very, very careful with this one. We'll see. I mean, that's quite the place to go. We got a major floor that we have to get through, but a lot of room to the downside if it can. So if you're in this one, just hang on and have a trade plan. So that's what I would tell you to do. And again, you probably shouldn't be trading without a trade plan, a specific one. A great one we created for Al and the Hawkeye was a fantastic. It's going to save him a lot of heartache. Our pound US, kind of the same picture we're sitting on this. We've got this nice turn. This is the place I would wait for a return to. If it comes back to the pivot low, that may be our chance to enter. So that we want to look on the higher context. There it is right there. That's going to be the one, call it 3,400. It looks like it wants to go down. Again, this is based on dollar strength, most likely, not pound. Anything with a pound. It's mainly going to be the dollar on this one. So that's going to be this area right here-ish, 3,400, right about there, which is what we identified. So again, if you want to put a mark there, 3,400 would be your potential entry there. Is there anything that we have missed? I see the Euro Aussie. And yeah, I think we've got it covered. Any questions in the room tonight? I'm not going to belabor this because, again, we're not chasing. I hope. Oh, thank you. I'm glad the beginning, that first 15 minutes is going to be critical for tomorrow as well. I think we've lost in our skills of trading the understanding of making sure we know what we're doing. with the macro of stuff. So again, if you are wanting to trade with us tomorrow morning in the Hawkeye session, there is a new link. It's in the Telegram under TraideMasters members as well as our TraideMasters general community. Make sure that you definitely log in for that and make sure that you join in and register because that link is going to be different than our past links. So anyway, we hope you guys have a great night and we will see you guys next Monday. Hopefully catch you tomorrow morning again. God bless.